Okay, folks, welcome to another Thursday Night Stock Charts Live. This is Bob Desmond, and we're going to talk about a couple of headlines, Fed balance sheet, as well as going over the weekly charts. And if we have some time, we usually do, we're going to take some requests from, of course, our members, and then if we have time, from the audience. So let's get to it. As I like to do each Thursday night, we get the Fed balance sheet, which is released. And yet again, we put in new all-time highs in the Fed balance sheet. This week, we closed out the week, this is as of yesterday, $8,101,945. Remember where we were just before the financial crisis? The Fed balance sheet was at $800 billion. And this is a rise versus last week of about, I think about 90 billion, if memory serves. We were 8064, around there, close enough for government work. So a big jump up higher week over week on the Fed's balance sheet. There is some talk. I'm hearing more and more from people I know that there's an expectation that by the end of this year, the Federal Reserve will begin to speak very loudly about tapering, meaning rather than having the Fed's balance sheet continue to grow, you're going to see it taper off and ultimately begin to decline. Now, we've been here before. We've been to this dog and pony show a couple of years ago where the Federal Reserve got the Fed's funds rate up to, I don't know, I think it was a 10-year yield, up to about 2.5%. The market buckled. That was, I don't know, back in let's go back 5 years. That was right about here. Oh, no, that was right here. We've put on all this debt since that time, actually back here, because this was COVID, this spike up. We put on all this debt since the last time they tried to taper. And to Powell's credit, he came into office trying to do the right thing of rolling off the balance sheet, but it was stopped. It was stopped by President Trump. I didn't agree with it. President Trump wanted to prevent a stock market crash. I think he should have let it correct. That would have been the right thing to do. Would have been ugly, but we probably would have been through it by now. It didn't happen, so while I'm a big advocate for the former president, I don't agree with everything. I think he had it right when he was campaigning. We are in a big, fat bubble. And that was back in 2016. So 2016 was back here. And wow, look at how much we've grown. Let's say hello to people. Jennifer Trades, what a week. Told you guys, Tues, going to take off. Anyone get into Tesla? I'm not going to read all the symbols off. Jody, hello. You are on time. Of course you are. The first two people to comment, this is the first. The first people to comment are females. Wonderful. We're expanding our audience. We're very, very inclusive. We're very, very inclusive. So welcome, ladies. Paul M., hello. Good to see you, sir. Lots of reverb. I got to get a new mic. I don't know what's going on. It's, you know, when I do a video recording, not live, it works fine. But when I do a live stream, it just doesn't work proper. Testing. Is this any better? I'm going to toy around. Let me know if it's all right. I'm going to change the settings here from time to time. I know it's annoying. Sound is so important. But sometimes it's good, sometimes it's bad. I got to swap out mics. Yeah, I know, John. It's an ongoing thing, brother. RB, hello. Danny, hello. So it's okay, John? Turn off my speakers. My speakers are on. Hold on. How's that? No, there's only one computer on. Let me know if that's better. Sounds horrible. God damn it. Oh, man. You know what? I'm going to switch microphones. I'm just going to use the webcam. We'll see if that's any better. Let me try to do this. I'll change. Just let me know how that is, if that works. I won't, Paul. We'll fight on. Let me know if that changes it. If that didn't change it, I'm going to swap mics. And we'll do it quick. It's better? Awesome. Positive mental attitude. All right. Thank you all for your help. I appreciate that. Cool. All right. So the key was, in case I forget, you guys have better memories than I do. Tell me to take off the other audio mics. You guys led me to think about this. Now it makes sense. Okay, cool. All right, let's do it. Okay, good to go. All right, so the gentleman you're in the background that you're looking at, I don't know if you could see it, that's Paul Volcker. You had Janet Yellen up on Capitol Hill today. Actually, she was in front of this, up on Capitol Hill in the Senate. And I just watched an exchange between her and Senator Kennedy. And he's a character. Sometimes I like him. He's a little bit hokey. But today, he knows his financial stuff. I'll tell you. I got to give it to him. Because he hammered her about inflation not being transitory. And when she said she expects inflation to decline dramatically by the end of the year, he said, then why is the Federal Reserve raising interest rates on excess reserves? That's a sign that they're tapering their balance sheet. They're trying to tighten up the money supply stealthily. She had no answer. She wouldn't answer. She would only go with long-term forecasts. And he kept peppering away. She wouldn't answer the question appropriately. And finally, his time ran out. They wouldn't extend him any additional time. Check out YouTube. I believe it's under the Forbes channel. And it's interesting, the exchange. It's on YouTube, Forbes channel. Type in Senator Kennedy Yellen today. Pretty interesting stuff. So let's... I still have short positions. I haven't added to them at all. But I still have short positions of the Tues and the IWM. And I'm going to share with you why on the Qs, why I still am. So stick around. You're going to love it. IWM, that's a little bit sketchy. We haven't broken out to new all-time highs yet. I'm worried that we will, and I'll get to that in a moment. So, in fact, let's just get to it. That way we could spend more time on chart requests. So, are these my weekly charts? No. This is my weekly charts. So let's begin, as we normally do each week, with the bond market. Folks, we've seen a decline in the yield curve quite a bit. And that has allowed for, here it is, that has allowed for stocks to hit new all-time highs. I think this is coming to an end. That doesn't mean stocks are going to crash. Although they should. They're very expensive, but as long as the Federal Reserve keeps the heroin injections going, stocks are probably going to go higher. But watch out yet again for sector rotation, because we've already had it, right? We had the small cap strong, cyclical strong, right? That stopped. Now technology got strong, Q's strong. I'm going to make the argument today that that's probably going to change fairly quickly. So monthly chart, yield curve, 2s versus 10s. So for those who are not familiar, and this is pretty wonky stuff, I get it, but it's important stuff. So when you see the yield curve declining, that means there's a spread between the 2-year Treasury interest rate and the 10-year interest rate is narrowing. You're not getting paid a lot to go further out in that curve, as you should, right? Because you're tying up your money longer term. So it just makes more sense. Borrow short term, get paid similar amount of interest. So we've seen a massive correction off of the highs of March. Now, during this time, we've seen gold rally, but then roll over. So as the yield curve widens out, that's really, really good for gold. And not that I'm an ultimate bull on gold this week. I am not. I'm not happy with it at all. But the yield curve has pulled back. It's bouncing off of its 200-period moving average. I think that we're going to rebound. I'm not calling for an up month on the yield curve. That's way too much to ask for. But let's go to the bond market and let's talk about it. We're going to give you two views of the 10-year yield. Remember, when yields go up, bullish for tech stocks, bullish for basically tech stocks. When yields go up, bullish for banks, cyclicals, transports, etc. When yields go down, bullish for tech stocks. My apologies, I inverted that. So the 10-year yield, stocks are now nearing oversold levels, and we have not put in a new weekly low. So while this is not an extremely bullish week, there's a time during a sell-off where you got to say, have we stopped going down? That's the step number one on the 3,000-mile journey of a long trek of getting back to a breakout point. We haven't broken the lower band of support on this bull flag setup. Folks, the trend is still higher on the 10-year yield. This is simply a consolidation. In fact, let's update this. Let's go to comments, see what comments. Jennifer's a bull, a raging bull. Although she was right on silver. So here's our bull flag setup. I'm not saying we're done going down here, but I think we need to acknowledge the fact that we do not have a new lower low on the week. Stokes is still weak. I'm not looking for a pop-up right here, right now, but soon. Daily chart. The daily chart flat on the day, consolidating. Now, take note of this chart here. Actually, no, wrong chart. Let's get rid of this. This chart here, where you're seeing higher lows. Higher lows on your stochastics. Remember, these two indicators are momentum indicators. So it's a signal that momentum is beginning to change. We're not out of a corrective phase yet. We're still in a corrective phase, but we are beginning to move up higher on these indicators. MACD is very, very oversold. Now, what's happening tomorrow that could make this move up higher? The PCE report. That is the Fed's favorite report regarding inflation, and it's coming out tomorrow. Now, if anything, we should see a decline in the PCE because you've seen a lot of commodities come in. Lumber has been, the futures anyway, have been halved. Oil has gone up. Nat gas has gone up. Housing has gone up. But a lot of commodities, copper, etc., have come in some. So we may get surprised with a flat number, maybe a minor miss. But I'll tell you, man, if this continues up higher tomorrow, if we beat 0.6%, I mean, that's a huge event that we beat expectations. And you should expect to see the knee-jerk reaction of the market. Buy the dollar, sell gold. Why? It's because that's a knee-jerk reaction. They believe that the Federal Reserve is going to have to act a lot quicker than expected, so they buy dollars and they dump gold. But I think that's the wrong move because the Federal Reserve, if inflation is already running on average over 5%, and that's being conservative, if you use the old calculation of the CPI prior to the hedonic adjustments, you're probably in double-digit inflation range right now. But let's just use current state, what they're reporting, average 5% inflation. Think about it. If the Federal Reserve just raises interest rates a couple of basis points, is that really going to impact inflation all that much? They're already so far behind the curve. And if they get very, very aggressive, they're going to send the stock market into a tailspin going into the midterm elections. It's not going to happen. It's not going to happen. So tomorrow's going to be a big day. You have consumer spending out tomorrow. So if this comes out hot, consumer spending, and you also have inflation coming out hot, after today, we had initial jobless claims beat yet again to the wrong side. They were hotter than expected, more jobless claims than expected, second consecutive week. Remember, the trend has been down for several months now, but now we're hooking back up. So it's a horrible mix of economic data that we received this week. Durable goods, we missed today by a wide mile. If you take a look at the non-defense capital goods orders, we had a negative number. This is non-defense. GDP, no change there. The services index yesterday came in with a miss, a big miss, but still above 50, a sign of expansion. Manufacturing index came in a bit better by a tick, a sign of expansion. Existing home sales beat, so this may inflate the PCE number tomorrow. So buckle up for tomorrow morning. It's going to be an interesting ride. So let's get back to the weekly charts. Here's another view of the 10-year yield. Take note of, again, how we have no new weekly low. And last week, this time last week, when we last met, we had broken down below this lower band of support. What did we do this week? Inside week. No new low yet again. We're back above support. Stokes, very weak. Bonds, a beautiful day yesterday, right? But we spoke about this, I believe it was last Thursday night, where we spoke about this potential head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline. So yesterday we had a big move up higher. A lot of money went into bonds yesterday. What happened today? It gapped down. No follow through. Now we did have 5 consecutive up days. 1, 2, 3, 4, 5 consecutive up days. Not a shock that we got to pull back, but it's something to keep an eye out. Watch to see whether or not we put in a rounding top here, forming that right shoulder of the head and shoulders top. Now, what happens if we break out on the 10-year Treasury yield? Well, that rally in the Tues comes into great question. And we'll go to that chart in a moment. Now, there are some signals out there that tomorrow they're expecting a hot number on inflation and that they're getting ready to bid the dollar, sell bonds, jack up yields. And the weekly chart isn't showing this except for this little wick on the tips where we have a little bit of a topping tail on the tips. But when you drill down to a daily chart of the tips, today was a very bearish day. So this is a signal to me that they were getting ready for a hot number on inflation. Where's my daily setup? There it is. We broke support today after recapturing it yesterday. Stokes still look good. RSI a bit meh. Volume light. So it looks like you have traders out there front-running tomorrow's report. There's more on this. The dollar is not necessarily indicative of a front-running for tomorrow. I will point that out. We're down on the week thus far. You would think that gold would have rallied? Nope. Daily chart of the dollar. We did eke out a gain on the, this is not updated, right? Is it? I think the dollar bull ETF was down today. So the Dixie closed up while the dollar bull, closed down today. Strange. Rarely do you see that. And that's what I was tracking intraday, the dollar bull ETF. But the Dixie, 24th, sometimes this update's late because it's an end-of-day chart. Closed up. 24th. Okay. Interesting. Now, here's what leads me to believe that we're going to get a lot of volatility. A lot. Danny, I know how folks you get, Bob, but since you have been having issues with your mic, it's a good idea to check the comments periodically. It's back again? The mic is bad again?
All right, I changed it. How is that better? It's not going to be as good a quality as normally, but let me know how it is, please, if it's usable. Oh God! Oh my God! Hang on 1 second. Here's my old one. Nah, it's not turning on. All right. This is embarrassing. That's good? It's fine now? Okay. You sure this is the webcam mic? Okay. Keep them off the room. All right. Okay, let's go. Good? All right, let's do it. Westlaw made the call, we're going. All right, so the VIX on a weekly time frame looks like death. We broke out last week. Look at this breakout. Huge move, right? We broke through 1, 2, 3, 4, 5 resistance levels last week. What happened this week? Annihilated. Annihilated. Why? Because the 10-year yield is directionless. But then you take a look at today's price action and yesterday's price action. Look at this. Look at the volatility rebound. This is a VIX compression. This thing looks like it wants to rip. The only thing missing is that I would have been a lot more passionate that it's probably going to rip up higher had we closed positive. They couldn't get it to close positive. So while the markets had a very, very strong day today, there was a lot of buying today, yesterday, somewhat the day prior of VIX options as an insurance policy. So not everybody is convinced that this market is going straight up from here. Now, with Fed monetary policy being what it is at current, it's accommodative and the market should head up higher. But if they believe that the Federal Reserve is going to have to start tapering their balance sheet, everything changes. Now, one of the reasons why I think that yields are going to begin to pop back up is if you take a look at the transports this week, an inside week, no new low. They've stopped going down. Granted, we have broken trend, lower highs, lower low, daily chart. We're stuck at the 15,000 mark. Can't break above it. Might we have a lower high here? Quite possible. If yields drop down, then yeah, the transports are going to have a hard go of it. We're right at resistance. There's your widening downtrend channel. Weekly chart Dow Jones Industrial Average. Big breakout, huge breakout. One trading day left to go in the week, though, and a lot can happen. We know that. So at current, we have, after a horrible week last week where we crashed through not one support level, but two, and flashed a breakout point failure or a bull trap, so far this week, we have recaptured. All is right with the world, assuming that we close up on the week or close above this resistance level in blue on the week. If it fails, it gets worrisome. Daily chart. Nice move up high. What we up? Nearly a percentage point on the day. How's volume? Light. The S&P 500 weekly chart. Very bullish. All-time highs on the week. Indicators, higher lows, with the exception of RSI, which did break down. But a heck of a rebound on the week. Volume is going to be very, very light. Daily chart. Nice gap up higher today. Volume rose, but still below average. Stokes look good. Now the small caps. If the markets perceive that there's economic growth and yields move up higher, the small caps go up higher. So we're at the precipice of having to say no mas on the short of the small cap. We didn't go averaging down, none of that nonsense, but it's time to reevaluate and say, okay, if the perception of the market is that we have economic growth and that yields are going up higher in anticipation of more organic growth, small caps are going to move up higher. Watch consumer spending tomorrow. Watch inflation. So, because if you see the consumer spending number drop off, yet inflation continues up higher, big worry. Daily chart. We broke out yet again. This is a porous resistance level. Volume light, but a very good day, up nearly 1.5%. Now, for the Qs, a bit of a different story. Yes, new all-time highs this week. Very light volume. I'm going to go to energy in a minute. Westlaw. Okay. Daily chart. Now, here's where things get concerning for the Qs. This type of price action at all-time highs, this is like short covering rally. They're gapping it up at the open and then fading the rally on very light volume. So beware here. This is thin ice zone. When you're at all-time highs, the last thing you want to see are filled candlesticks, because when you've seen them in the past, like back here, or back here, or back here, or back here at an all-time high or the top of a trading range, it generally doesn't end well. Right? You normally get a pullback. So before I got all aggressively bullish on the trip Qs, this has got to get resolved. Either a pullback and a retest of this breakout point, let it consolidate for a day or so, then get a continuation move up higher on volume ideally. Then you get a healthy continuation breakout, but you got to see yields pulling back. Once we start crossing above, what do we close out the 10-year today? Right at 1.5. Once we start crossing back above 1.5 on the 10-year yield, tech doesn't take kindly to it. Now, another reason why that I think that the inflation data is going to come in hot tomorrow and bonds are probably going to rally. Excuse me, bonds are going to sell off, yields are going to rally, is because of the banks. The banks, to be fair, they passed the stress test today. They're going to be able to pay dividends and do a bunch of buybacks. So that being out there, that just came out today. Very good week so far on the week, an inside week after a horrible week last week. Remember, the banks do well in a rising interest rate environment. They're bidding the banks. So I think that what you're seeing here is a front running of hot CPI and a sell-off in bonds and a rise in yields tomorrow. That's my take. I haven't acted on it. I just haven't done anything. I haven't taken shorts off. I haven't readjusted anything today. Wait and see mode. Technology, a very strong week, up 2.5%. Volume light. But take a look at the price action today. Not exactly identical to the triple Qs, but the interpretation is the same. Yesterday, reversal day. Today, a gap up higher. Indecision day at all-time highs. Generally, that's not what you want to see. You want to see, ideally, a downward sloping pullback, then a resumption higher, a stair step. You're not getting that. This is almost, excuse me, almost like an exhaustion run these past 2 days. And again, you can go back in time. You see price action like this, filled candlestick or doji star formation, very close to one, like back here, it doesn't end well. So keep an eye on this. Semis, outstanding week so far, up 3%. We have a breakout on RSI, I believe. Let's update this. Yep. Oh, damn it. We have a breakout on a weekly time frame. So we have an indicator, the RSI, leading price performance. So it looks as though the semis want to break out higher. Daily chart. Good day today. Really good day. Up over 1.5%. Nice W formation here. The semis look very good. We break out above 257.54. Game on. Very bullish chart. Volume is horrible though. Ultimate oscillator, love the defense of the 50 neutral mark. W formation. Semis look very, very good. Biotech's bullish key reversal bar on the week. Very bullish. Daily chart, higher lows on Stokes, higher lows RSI. Big breakout today. I think biotechs move up higher. Good volume. Consumer discretionary, huge week this week. Up over 2.25%, 3/4%. Daily chart, no bueno. Filled candlestick. It's kind of like a theme tonight. A lot of filled candlesticks. Volume was good though, but a lot of it was churning. Let's check out the first of 15-minute chart. Okay, look at this. Big volume into the close. Let's go to a 5-minute chart. Big tug of war, the final 15, 20 minutes. Big sell order, final 5. Energy, Really good week. This is another indicator, folks, that yields are moving up higher. So think about it. You've got transports looking good, banks looking good, energy looking good. That's all an indication that yields are going to move up higher on an expanding economy. Now, as yields move up higher, it's going to be more and more difficult for the tech names to do well. The semis look great. Tues and XLK a little bit iffy. Oil, big move up higher. You want to talk about inflationary? I mean, since last month, oil is up nearly 9.75% month over month. Excuse me, just this month. And the month isn't even over yet. But there's no inflation. Oh, actually, I can't say that anymore. Now they're admitting there's inflation. Emerging markets. This to me is an indicator that they're expecting the dollar to drop. Because usually emerging markets generally trade inversely of the US dollar. So the dollar is down on the week, yet emerging markets up strong, bullish reversal bar, looking good. Let's go to a daily chart. Good day today, up 3%, leveraged ETF, volume very, very light. Gold. What can I say? Gold. We're up on the week, but not very sexy. Volume is very light. Daily chart. It's trying to base here. It's trying to put in a higher low. A lot of resistance up here at around 1793. Down volume dropped off today. Stokes weak. No V-shaped recovery here. Very similar to what we had back here in March. But what that required, you had resistance back here, and then ultimately you had to sell off, wipe out the weak hands, and then it was off to the races. So I'm not convinced that we've seen the lows here for gold. We may, for all I know, but I'm not going to be the least bit surprised to see a little bit more weakness here. Now, the GDXJ, this is not my annotated chart. That's your price target for gold? I hope you're right. GDXJ attempted to break out earlier this week. You wouldn't know it. It's actually up on the week. You wouldn't know it. About a quarter percentage point, a little bit more. Volume light. Daily chart. Close to a double bottom setup on the GDXJ. These are the junior miners. We're holding support. And I spoke about this with members last night, that yesterday was a very, very bearish day for gold, but I was suspect of the price action. And I didn't want to make any changes whatsoever to our portfolio until we saw the economic data, which is mostly back-ended this week, come out. So we still have the PCE coming out. And what I mentioned last night about the price action yesterday is that historically this support level where we challenged yesterday and actually broke down below is traditionally a porous one, but it happens to also be a launching pad for continuation breakouts higher. So we had a bearish reversal bar, and I said last night, yes, bearish. So bearish, I didn't want to go buying the dip, that I wouldn't be the least bit shocked to see a lower low, but I also would be very surprised to get that lower low and not get a pop-up higher. Kind of speaking out of the both sides of my mouth, but if you look at history here, like back here, we broke support, next day, gap back up. Back here, broke support, next day, gap back up. So today, another day where we recaptured it after a bearish day prior. So don't be the least bit surprised to see, it's always darkest before the dawn with the gold miners, always. I mean, think about owning GDXJ right here, and all of a sudden, the dark days, and you're into an immediate rally. It's crazy. So gold and the miners, they flip on a dime. So it's encouraging to see the consolidation here on the gold miners and the fact that we recaptured support. The silver miners, not so lucky. We broke weekly support last week. We tried to recapture this week. No bueno. Daily chart, very similar to the GDXJ. So I think it's just a matter of patience right now with these names. Silver, up week, about 1.5% daily chart. Yeah, I'm not loving this price action here. Yes, we're up, but all up days are not alike, right? So they're rallying silver, but they're fading it, right? You want to see whatever you're trading, if you're bullish, close at the highs of the day. That's not happening here. So I'm a little bit suspect of precious metals at current. That's me. I'm not talking my book. Denny, we may hit 1680 short term. Quite possibly, Denny. Quite possibly. Where did we close today? I think that's a little bit much, to be honest with you. That's a big retrace. I think that I think 1755 would be a very interesting support level, and really it's one that's got to hold, because that mark, technically 1754.20, was the pivot point of this W formation. If that fails, that's really a significant break in gold, and it's a sign of deflation, not inflation. So I think right now what we're dealing with is the perception that the Federal Reserve is going to act aggressively enough to combat inflation. You also have a school of thought out there that believes that when the government stimulus checks end in September, that you're going to run into a bout of deflation because you're going to see spending dry up. But that being said, you have 9.5 million job openings out there that can be filled. So will people not go back to work and start spending money again? So I think that bout of deflation is a little bit over exaggerated. It's not going to last as long as most people think. So those are my thoughts. Let's do some chart requests. Okay. Oh, here's the article about the stress test. I'll share this out. JP Morgan's going to rip. All these banks are going to rip. In blue is the estimated stock repurchases. I'll share this. Norris, hey brother. Let's take a look. Let's take a look at Exxon Mobil for you. Folks, we're going to be using TrendSpider, automated technical analysis, scanners, multi-time frame analysis, 35% discount code below, and their alerts are the best in the business. Let's go to Exxon Mobil. Can it break 66, Norris? I'd be shocked if it didn't. I would really be shocked. I mean, a beautiful, beautiful week here. Volume is probably going to come in a little bit light, but it looks as though we're poised for a continuation breakout. In fact, we have broken out this week. If you take off the automated trend lines, here's my manual. We broke out above it. Then we have automated trend lines above, technically 2 of them. So we broke through 3 resistance levels this week so far. 1 trading day left to go. Daily chart. Really, really nice. The only thing I don't like, Norris, and I don't think it's going to matter much, is his volume dropping down a bit below average. But otherwise, I think that they're just waiting for that PCE number tomorrow. And they're waiting for yields to move up higher. And they'll bid Exxon Mobil. And it could be 366 tomorrow. But it all depends upon yields. We're naming this the Norris trade. There we go. Our alert set. Let's take a quick peek at seasonality. Going back 12 years. All right, so seasonality for the summer months is not favorable. We need to point that out. Again, 12 years. Let's go back a bit further. Yeah, historically, the summer months are a bit weak for Exxon Mobil, and I'm sure the energy stocks as a whole. But remember, you know, we're flirting with a recovery on bond yields. So, you know, seasonality is very, very helpful, but it's not 100%, obviously. So we can't put all our eggs in one basket and say, due to seasonality, we're going to avoid it. What matters most is price and volume. So if price and volume follow through, then you got to go with the trend until the trend stops. So right now, if we see a pop-up higher in yields, then I'll bet that we may see a pretty healthy, at least beginning of July. How it ends, not quite sure. But Exxon Mobil, very, very bullish. All right. LMT. LMT, we have a continuation breakdown. What you want to see here is a close, right? You don't want to see a daily close lower from here. If we hold here, great. If we do not put in a new weekly low next week, between Monday and Wednesday, great. Because if it doesn't make a new weekly low, by Wednesday, it's probably not, right? So if we hold the support level at 377, that's bullish. Daily chart. Now, the daily chart, we bounced off of 2 support levels. My manual and the automated. Came very close to it anyway. Volume light. So this is one I'd watch into next week. You want to make sure that you don't put in a new weekly low and that trend continues. So I probably wouldn't be a buyer unless this turns into a bullish reversal week, meaning it closes not down but up on the week. That would be very bullish. That would have me in. But If it doesn't, if it closes down on the week, I'd wait till next week. Make sure you don't get a new weekly low. That's my take. Paul, the good news they got would add to the banks. For the stress test today, that article I just shared, if you're referencing that, yes, very helpful to the banks because they're paying out dividends because they passed the stress test and they're going to buy back their own shares. So that's going to goose their earnings and lift up the shares. Time we got? We got 4 minutes to go. So yeah, Paul, that's a good thing. All right, Jennifer's saying Apple, touting Apple. Let's see whether or not she's right. Teasing because she calls me out all the time, which is fine. I have no problem with it. It's a dog. It's a dog with fleas. How do I know? All right, weekly chart. All right, to be fair, we broke out this week. One trading day left to go. We don't know whether or not it's going to hold this breakout point. So give it some room. You're welcome, Paul. Now, it's great that we broke out, but you see that we faded here a little bit. Why did it fade? Automated trend line. Bam. Right at resistance. So just keep an eye on this one. What would be bullish here? A good setup for Apple would be a retest, and this is probably what's going to happen. A retest next week of the breakout point. Seasonality. I'll use 12 years to remain consistent. Seasonality is outstanding. It's the best month of the year for Apple, up 92%. So really, really strong seasonality we're moving into. Let's take a quick peek at Microsoft. Microsoft, remember, these are the two largest components of the Tues. Microsoft, a massive, massive week this week. We broke out above, again, automated trend line. We broke out. I also want to know if we fail to hold it. Good. Daily chart. An okay day. Up day. All right, let's, did John Spencer have one on here? Norris, if I didn't, I think I said thank you. If I didn't, you're welcome. I mean, excuse me. I think I said you're welcome to your thank you. If I didn't, you're welcome. John, what did you request? I could have sworn you requested something. I got it. ORPH. What is this? What are you trading here? Ugh. Ugh. I don't even know what to make of this. Pull back. Big gaps high, big sell-offs here. Bearish reversal bar last week. Reversal week this week. Man, the volatility here is insane. Good volume on the week. All right, listen, making the call here. It's got to close above 10.50 per share before I touched it. That's been resistance. That's the common denominator of all this mess of volatility is the fact that we haven't been able to close above 10.50 per share. If it's able to do so and close there, then it becomes interesting. Until that point in time, it's highly speculative, highly speculative. Daily chart. Bearish reversal day today. 10.50 is the price. It's got to close above it, or else it's way too speculative for me. ATHA. Big gap down. These are pharma names. These are fairly new issues too. Not much track record. Let's go to a weekly chart. All right, so obviously a bad news event here. I don't know what it was. I'm going to take off the automated trend lines. Now you don't see it. Now you do. This prior support level, which held throughout over here, now becomes resistance. So if you're looking for a trade, what's this thing worth? I mean, a lot of risk, not enough reward. If you're dead set on buying it and looking for a price target, I would be a buyer on a close above 11.65 per share. I like the fact that we don't have a new weekly low. It's an inside week daily chart. But it's obvious. Here's your resistance level. This is the line in the sand that it's got to close above. So I wouldn't touch this until we close above that mark. Buy on strength. It's got to prove itself worthy of your investment dollar. And it is 7:02. I've gone over. Let me read some. Yeah, Westerlaw manipulation, quick in and out trades. Okay, all right, good. All right, everyone. Everyone have a great and profitable day tomorrow. A great weekend. Thanks for joining in. I really appreciate it. If you could smash that like button, that really helps me out a lot with the YouTube algorithm. Don't forget TrendSpider, 35% discount code. I give it away free to our silver and gold level members. Thank you from the bottom of my heart. Have a great night and be well. Anytime, Denny.